I think the major issue everyone's trying to grapple with right now is the Paris Agreement was a tremendous step forward and has built this momentum and almost belief that things are going to change. But the Paris Agreement is yet to be ratified, and then it's really over 150 individual company commitments. So the real issue I think you can see it in the room right now is that everyone is hungry to ensure that and encourage the governments to take their INDCs and commit them into policy. So until that happens, I think there's a degree of nervousness about, the actual deliverability of policy outcomes, and that obviously then makes it more difficult for investors, rating agencies, others to assess what are the longer term implications of carbon transition, because you don't really know what is the pathway that is going to be delivered on.
Yeah, that's really interesting. I haven't heard many people say that the actual ratification and coming into force is that important from a risk perspective, but you clearly think that potentially it could come into force. People are saying maybe by the end of 2016, US and China potentially going to sign up in September. You think that will make a material difference if it passes the 55% level when the Paris deal is kind of in there in the UN books?
Well, I think what people need is long-term certainty about policy settings, and the Paris Agreement, if it's implemented, ratified, implemented at a national level, will give companies, investors, everybody a degree of certainty about what long-term policy settings are going to look like, and it will also continue the momentum, because don't forget the Paris Agreement obviously has this ratchet mechanism in it. So first of all we need to get it implemented, then we need to see the ratchet mechanism working, and if you see that, the momentum will build very fast. But as I said, the key at the moment is to ensure that we do see that agreement implemented at a national level, because that's essentially what it is.
From a risk perspective, what areas of the world give you most confidence in terms of the trajectory they're going? Clearly Europe is in a state of flux at the moment, but are there other areas of the world where you think we're pretty sure that investor sort of certainty there is fairly strong in the green economy?
I think if you take a step back, the investors, pretty global like ourselves, are in a situation where they acknowledge climate change risks are something they need to start factoring into their investment decisions. So I don't think they look at it and think one part of the world is more of an issue than another part of the world. It's more about how holistically do they assess the implications of these risks. And that's one of the things that we've been very focused on, is that we've just published a report this week that is essentially saying from our perspective, we've decided we need to have a baseline scenario for assessing carbon transition risk. We've essentially decided the best way of doing that is to assume that the Paris Agreement gets implemented. That's a starting point for us. That then allows us to think about the implications on an industry-by-industry basis for those industries that are most affected by it. Does that change by region? Yes, it definitely does. But again, you come back to, until the Paris Agreement is implemented, the longer-term way of managing that is harder to assess.
And looking on a country-by-country basis, do you think, maybe not now, but in the future, countries which are not taking their low-carbon transition seriously, will they be at greater risk of having their ratings downgraded? Not talking about this year, but in the future, is that going to be something you think that the major agencies will be looking at when assessing how stable a country's policy outlook is?
Well, that's not my area of expertise, I'd like to say, but I don't think you can think about the implications of carbon transition risk in terms of the narrow implications it has for a sovereign credit rating. It's much more about the broader implications for sovereigns, sub-sovereigns, corporates, banks, everybody. Everybody's in this together. So I think we have certainly published some work last year that said, looking at 86 sectors globally, which ones are more or less exposed to climate change risk. The sovereign and sub-sovereign sector, from a carbon transition perspective, is less exposed because they're actually the policymakers implementing that. But if they fail to implement that, then clearly there is a longer-term tail risk from climate change issues that could gradually impact on their credit quality, particularly the developing market economies, because they're less institutionally strong, less economically strong to deal with what could be some fairly substantial climate change-related issues.
Final question, in terms of what's going on at the moment, the volatility in the markets, do you think a European Union without the UK, will that be a more or less attractive proposition for the green economy and green investors?
It's very early days to try and assess what the implications are of a Brexit to a broader carbon transition and climate change policies. We heard people in the room there today saying that they think both the UK and the EU are aligned around this particular policy, and our expectation is that yes, there's going to be some uncertainty about how for example, the Paris Agreement gets impacted by this, but that the broader national policy commitments remain the same.